Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello traders, checking in on the broader market. So the bears getting walloped. So we have a very key test of resistance ongoing right now. We'll look at that in just a moment. But bottom line is we're talking about bull flag confirmation on the weekly time frame. The daily chart, we've hit a higher high now. The high in regular trading was 294.88, and we got up to $2 above that level today on SPY. So as far as the weekly chart is concerned, we just confirmed a weekly bull flag. And you know there's a lot of shorts in pain. The reason being, the most bearish pullback that we've seen recently was middle of last week. We had a daily downtrend confirmed straight into a massive bounce. It is just time and time again, V-shaped recoveries and bears being punished. So what we don't have yet is a clear break of the extended hours euphoria high. 296.77 and the high of today, 296.75. That's a double top. And let's look at it on the futures chart. 29.72.40, 29.69.20. We did not break that level. The 4-hour time frame is very extended. It's entirely possible that we see some red tomorrow as we look for a 4-hour higher low to form. So there is still one little short-term resistance level to go, but other than that, we know bulls are full steam ahead. Today was a day marked by laggards, our laggard sectors that we've been watching. Big bull days in the laggard sectors, the airliners, the cruises. RCL was up 19% at one point today, and the financial sector. And we weren't necessarily seeing sector rotation. We weren't seeing funds leave our strong names and go to our weak names. Our strong names held on just fine. We just saw extra money going into the weaker names. So looking at IWM, V-shaped recovery. Normally, I would absolutely look for a daily lower high compared to 132.95. We broke that level with a V-shaped recovery. Extremely impressive. Still not over the high, 136.85. That's now the most important resistance, but tons of space where if we pull back, we're going to look for a daily higher low. Anything above 117.18. QQQ, continuation to higher highs. So again, what I said last week is going to carry true through the summer. If QQQ, Amazon, Microsoft, and Apple are in daily uptrends, this market is not going to see any weakness. We'll see maybe some individual sectors see weakness, but the market as a whole, the S&P 500, will not see weakness as long as they are marching ahead. So our new line in the sand for QQQ is 215.99. And QQQ has not broken a line in the sand level that we have established as a key support pretty much at any point over the last month plus. So new line in the sand, 215.99. Bull break over 228.10, but what's our euphoria climax high? We already broke that. So 228.10 is the level, and we broke it. So we're watching the hourly uptrend now in the short term, and we know any daily consolidation above 216 keeps the bulls in control. XLV, bull break, gap up with profit taking, but we did break two higher highs. We broke both resistance levels. We hit the high of the entire bounce. Our line in the sand level is 97.57. Anything above that keeps the daily uptrend intact and keeps the daily bulls in control. So it's all about that support level. Financial sector, 22.32 key resistance. Didn't break that today, but again, V-shaped bounce. Hourly RSI was approaching 80. It was 80 as we tested that key daily resistance. If we lose the hourly uptrend without breaking 22.32, we will look for a daily higher low to form compared to 20.09. Tons of space for daily higher lows, but the weaker names that did bounce today, and I'm talking again, cruise liners, jets, airliners, I should say, we need to see a daily confirmed trend change for follow through. Bull moves are nice. They catch shorts by surprise. They see significant movement, but it's the sustained follow through that is so important for keeping shorts covering and proving to us that bulls are buying dips. XBI, new all-time high, not by a lot, by 0.15%, but it was a bull break. Line in the sand level for XBI is 97.18. And that's a line in the sand level for XBI, but that doesn't matter as much to us for the broader market, knowing that the biotech sector does not matter as much as the healthcare sector or any other major sector we watch. Semiconductors did not break bullish yet. Resistance is 137.91, so we're still in this equilibrium. So it's all about 137.91 resistance into tomorrow. And if we lose the hourly uptrend without breaking that level, we will remain in this daily equilibrium and tightening range. So bottom line, a handful of names breaking bullish, a few names still with daily lower high resistances to be watching, line in the sand levels for the bulls to keep full control, and key short-term resistance for SPY is still a double top. TLT, just like that, right back to the lows. This is why I don't like TLT as far as daily clarity. So low, high of the bounce, double bottom, bull break, straight into a 2-day dump. So we know 162 is a base of support. Weekly time frame, still pulling back. So bulls not really able to get any momentum in their favor without giving it back. The VIX, anything under 40.30 was just a lower high, and we topped out at 39.30. We would have to see $26 hold and a break of 39.30 for a daily trend change. Otherwise, the daily downtrend will continue. So support is approaching, and if we look at our leveraged ETFs, TVIX, potential bottom fishing play approaching, but bulls must hold 131.79. We are still a good bit above that level, and hourly RSI would be oversold if that were to come closer into play. So there are some potential aggressive volatility bulls looking to buy off of the low of support, and certainly hoping for some kind of headline help to derail these market bulls. Gold, great move in extended hours, Sunday night into Monday morning, and then a ton of profit taking once the bell rang. That's notable. We are still easily in a daily uptrend, and we can pull back, and as long as we hold 1692, that's the line in the sand level, but it's a very big pullback with a lot of volume behind it. Next time we bounce, we're going to look for a 4-hour lower high. So metal bears will be watching to potentially top fish the highs on a 4-hour lower high bounce. But the daily uptrend is our guide. I'm going to keep my longer term GLD swing position as long as we are in a daily uptrend, and I'll move my stop loss up if we establish a new high or low. It's just a bit of a short term red flag, especially with the dollar seeing so much weakness today. Big red day for the dollar, big red day for gold. So why? Well, the market strength is certainly one reason. Money is racing into the market. So we'll continue to watch the metals uptrend on the daily. Silver, not as significant a bearish candle, definitely a bearish reversal candle, but you look at the 4-hour chart, this consolidation looks much more healthy. Have to lose the 4-hour uptrend to shift momentum. Congrats to the silver bulls recently, especially those that got in a few weeks ago. Silver making big moves versus gold over the last 2 weeks. Finally catching up in a big way. And it was that XAU, XAG chart losing the weekly uptrend that has seen this most recent leg up so significant. Miners. So miners, again, gap up in profit taking. Anything above 33.42 is a daily high or low on GDX. So we're still in a daily uptrend. It's just not an ideal close for the day to the start of the week. But as long as we keep the daily uptrend going, bulls are all right. So that's our focus. That's our line in the sand level for this week, these daily higher lows. Oil, U.S. oil, we've switched over now to the July futures contract. And again, the bulls are just following through with the bull flag. Beautiful confirmation and significant follow through. The 4-hour uptrend will be our short-term guide. Climax candle with no follow through. Bulls are very strong still. And there are no red flags. Let's see how USO responded. So USO getting that bull break follow through as well. Very convincingly. Keep in mind, zoom out, weekly chart, absolutely looking for a lower high on USO. Patient bears are still scouting an entry. They're just patiently waiting. Anything under 48.16 is a weekly lower high. That's 100% away. Very confident saying that USO is going to set a weekly lower high versus that level. So just patiently watching. We'd have to lose the daily uptrend to be confident in a weekly lower high. Aggressive bears are going to act before losing the daily uptrend. Patient bears are not. But for now, oil, bulls, riding high. Natural gas solid bounce, but we know we're just looking for a daily lower high compared to 205. And we haven't changed the 4-hour trend yet. Natural gas bulls are notorious for big moves with no trend changes and no follow through. So we have to consolidate and set a 4-hour higher low and higher high if we're going to believe that this daily bounce is going to see multiple days of follow through. So that's where we stand overall. Bulls win for now. There is a resistance level, absolutely. It's not game over for bears. They're clinging on to this one little hope of a meaningful rejection. But again, we could pull back to 2,900 and still just be looking for a 4-hour higher low. And there wouldn't be any major red flags if that's how far we have to pull back after this initial rejection. If you want to start seeing bears gain confidence, start taking out the daily higher lows in the most important stocks in the market. And I'm talking Amazon, Apple, and Microsoft. Amazon strong close. Microsoft unable to break the all-time high. There is still a double top on Microsoft. And Apple, no higher high yet. Very clear daily higher low set. Pretty much the bears have to hope, market bears have to hope for the tech sector to fall apart for the next 2 days. Anything is possible. Hope you're well. See you tomorrow. So this is Dottie. She's a old grandma, as you can see from her nips. Laid a few litters in her day, fostering her for a couple weeks. She likes wrestling and throwing her weight around and cuddling. Pretty good girl. Fitting name. I've only ever known old women named Dottie, and she's kind of like an old grandma. Little fuzzball nerd faces. So these are the ingredients of Dan's soup. We got some spinach, kale, chard, collards, some tatsoi, and some green onion that floured too soon, but you can still make some green onion soup out of it. Put it into bone broth. There you go.